We are live. Welcome to Living in Brittney's Bubble. Today, I have a second time guest, Brooks Kelly with the Mortgage Link. Thank you so much for being here today.
You're very welcome.
I'm so glad you're here. So we are going to be talking about opportunities in this market. There's a lot of fear around this market. And we want to help folks get past that fear because there are so many opportunities that they are possibly missing out on if they don't know this information. So Brooks, one thing I do want to mention here before we get started, so everybody knows what we're covering today, we're going to talk about interest rates. We're going to talk about the market. Be sure that you're following me on Instagram because I am doing a Monday market update every Monday. So some of this information I'll go over today is also in that video. So you can go back and watch that. And then we'll talk about all the opportunities that are out there. So let's get started, Brooks. Show us the interest rates. Where are they today and where are they going?
Yeah, thanks again for having me, Brittany. I appreciate it. And your Monday videos are awesome. I watch them every week. The information is spot on and very, very accurate and pertinent to our market to see where things are going.
Thank you.
I mean, on a week-to-week basis. So I love it. I continue to watch it and keep going on that. So
thank you for that.
Yeah, you're welcome. I'm going to share my screen here a little bit and show some technical stuff. I don't want to bore you too much, but the market has been interesting. So I'm going to show you the 10-year Treasury chart. So there's mortgage-backed securities are what mortgages are based on, and that's this chart, but they closely follow the 10-year Treasury. And at the beginning of this year, which was right here, is where the 10-year Treasury started their movement upward. So as you can see, over the course of the last 10 and a half months or so, we've seen an unprecedented increase in the 10-year Treasury yield. It's gone from, roughly 1% to over 4% in 10 months. And that's pushed interest rates up very quickly. So you can see it's not a linear pattern, just like anything moving. You see the ups and the downs here. We did see rates come back down a little bit in July. And then since that Fed meeting in July, they've gone up fairly considerably. So interest rates should not be as high as they are based on the 10-year Treasury note. Typically, rates are about 1.5%, maybe 2% higher for 30-year fixed rates than what the 10-year Treasury is. So you would think they should be 5.5% or 6% today, but they're actually pushing 7% above or below, depending on what your parameters are, credit score, different loan programs, things like that. So let's just say 7% as an average for talking point today, which has changed the affordability in the market, right? So when you go from 3% to 7%, your house payment goes up pretty substantially. And so it's caused a lot of people to move to the sideline or to wait to see what happens. So a lot of wait and see out there right now. And so what that's created is it's the change in the market, and what you've talked about in your Monday videos is inventory has changed. It's up slightly, continuing to trend up slightly, but it's dropped the prices a little bit. And so as rates go up, homes are not as affordable because almost every American goes off what's my monthly payment, not how much is the house, right? So if what's my monthly payment is too high for them to buy, then they're not going to buy. And so the home prices have to come down to match that. So we've seen a decrease in home prices a little bit. We've seen sellers a little more active in what they're giving, either closing costs or price concessions or things like that to get people to move. So it's not that the market stopped by any means. We see a lot of activity still. It's just not the same activity we saw back when we saw treasuries at 1% and rates at 3% and 4%. So.
Sure, absolutely. And of course, we'll talk a little bit more. Thank you for sharing that. We'll talk a little bit more too later on where are the opportunities from the loan perspective, even though we have interest rates where they are. So we'll talk about those a little bit later. I do want to dive in and share my screen and talk about the market right now. let's do that. And bear with me. This is my first time sharing live. So
All right.
here we go. Let's see if this will work. Can y'all see everything? Can you see my screen?
We see your motivation. Yep.
Yes, there's some motivation for you today, everybody.
All right.
Okay. Oops, 1 second. Okay. So let's talk trends really quick. Can you see this okay?
Yep.
Okay. So if you follow my Monday market update, I cover Collin, Dallas, and Rockwall County. I do have more data. If you want it, reach out to me and I'll get that for you for different counties. These are the primary ones that I follow closely. Okay. So median sales price here, as Brooks was just mentioning, is that yes, we are seeing this taper off some. You can even see from pretty much we've seen a decrease since May, which is where, if you remember on Brooks's charts, that's where we started to see those interest rates rise. Would you agree with that, Brooks, around like the April, May?
Well, yeah, they started to rise in January, which caused the frenzy, right? I need to buy before rates go up. And so as that frenzy increased, the sales prices increased because people wanted to get into a house before then. And so May is when everything peaked, basically.
Yes, absolutely. And so we've started to see, things start to adjust as it directly correlates to the interest rates. But the thing to know and to pay attention to is that year over year, I mean, the median sales price is still up. So yes, we are seeing a correction here. They're not taking a nosedive, but we are seeing a correction. One thing I want to show you guys from an opportunity standpoint is, those of you that have, waited and waited and waited to purchase a home because of, well, now the market's too hot and, I don't want to compete with multiple offers or whatever the case may be. What we are seeing, and I'm going to do a 10-year trend here, is that if you had bought a home in Collin County 10 years ago, median sales price then was $196, and now it's at $510.
Holy cow.
And I know. So that's $300,000 in equity over 10 years. Now, some may argue, well, people don't really hang on to homes for 10 years anymore. That's not, it's not very accurate. Okay. So then 5 years. So 5 years median sales price in Collin County is, was 306. And again, now we're at 510 Collin County. So that's 200,000 in 5 years. And so I know that
even if you take out the anomaly of that giant spike there, it's still significant, right?
Yeah. So if this never even happened, take us back to 485 or take us back to 455, right? Yes, absolutely. And so I know that we've, said these things in the past, especially in this industry, is, when should you buy? Yesterday. And so, yes, because homes do appreciate, and it's definitely worth, purchasing over leasing. So I love this graph. It's really cool too, to see this actually goes all the way back to 2003. How cool is this? And if you look at, just natural trend lines in general, if you were just to take this trend line up, and you would see, we're not really far off where we should be in the first place. We've had, 2008, we've had, many recessions that have impacted the numbers and have kept them lower for longer periods of time. So, based on this chart, it almost looks like, we're just kind of regulating and getting back where we would be if we were on a natural trend line. Yeah. From my perspective. What do you think about that?
That's incredible information. Just to see a graph like that, and it's not timing the market, it's time in the market, right? And if you never get in and you never buy, then you're never going to see that opportunity for growth and value in your property. It's you can't just say, okay, this was the bottom, I'm buying now, because if you look at this chart, there's tiny little bottoms all over the place, but the overall trend is like this, right? It's still got an upward trajectory. So trying to find those tiny little bottoms along the way it's impossible, so it's get in there and buy and be in the market and then continue from there.
Absolutely. So I do want to talk a little bit, just because I'm sharing the stats in general, right? The market right now, for those that may have missed my call on Monday. So I'm sorry to bore you, Brooks, but I'm going to add a couple more data points in here. So days on market. Now let me go back to 3-year trends here. Here we go. So days on market. So we are seeing an increase in days on market, not detrimental, right? I mean, we're still under 30 days in Collin County. That's great. The last time we were there was, let's see, where are we at here? Okay, last time, oh, that's Rockwall County, my bad. So so Collin County is at 24 days on the market. And the last time that Collin County was at 24 days on the market was in March 2020. So right before COVID. So we're really just getting back to that regular market that we were in before that big rush with COVID.
Yeah. I mean, even then though, 50 to 60 days on market, while that sounds like a long time, that's pretty average for a normal real estate market. So right now, I mean, what do you attribute the short time on market to right now?
Well, because I mean, what do you mean? Like, ask me again.
Like why is it 25 days? Like, why isn't it already 50? Like, if people have stopped buying houses or whatever, why are we not at 40 or 50 days? Or
yeah, I mean, it takes us back to, the month supply, the demand, and, the supply coming on the market. I've been watching that closely every single week. And yes, we've been seeing, pretty consistently a little bit more, inventory on the market, but the closed properties are trailing right behind. So it's still very consistent in that department. I think that the days on market and why we've seen some climb in that is because of price, because there's a lag. People are not listing their homes at the right price in today's climate and matching those interest rates. So I think that's really why we see those days on market where we do, even though the month supply is still at about 2.5 months and 2.5 months in Rockwall County. And it looks like we're at 3.2 in Rockwall County and 2.5 in Collin County. Did that answer your question?
yeah, so they're essentially coming out on the market saying, let's see if we can get this, but then they're, if they don't, it has to sit for a week or two before they decide we'll reduce it to where it should be, right? They're still trying to get May prices in November, essentially.
Absolutely. And that's where a lot of the opportunity is for buyers right now. Because if it's not listed right, if the sellers aren't listening to the realtor, if the realtor's not educating the seller, then there's some opportunity there, because we all know the longer it sits on the market, the more that the buyer is going to question its value. So it's going to naturally just drive those prices down. And so that's a great opportunity for buyers to be jumping on right now. So I like to see, a little tick in those days on market, because then our buyers have a really great opportunity. Because I will tell you, we are still seeing multiple offers in this market with the interest rates where they are. So if it's priced right, the buyers are out there, the demand's still there. So if it's priced right, it's going to go in multiple offers, not like it was, but it's just, sellers should be mindful of that. And then buyers also know that, if homes are sitting on the market, we have opportunities and we should jump on them.
Yeah, absolutely. I mean, I just think back to 6 months ago when we had all these buyers that were frustrated, right? They had a good credit score, a solid qualification, a fully underwritten loan, but 5% to put down or 10% to put down, and they just couldn't compete. They weren't paying cash, so we were looking for alternatives, the all cash offer, the bridge loans and all these things that that cost more money and cost, more anxiety. And now they, like you said, there's still some that go into multiple offers, but there's tons that are on the market enough time where you can make an educated decision. Like, you can really think about it for, sleep on it for the night and make an offer, or you can ask for some negotiations, some seller contributions. You can do a home inspection. I mean, there were many we did that there was no option period. And even if you did a home inspection, you couldn't get out without losing your earnest money. And you can actually do your due diligence like a home buyer should when you buy a house now.
Absolutely. I know you would look at the house and 2 hours later, you had to make an offer and, be best and final and, sometimes 100,000 over list price. Is just insane. Which brings me to this next slide I want to show you guys. So this is the percent of original price. Okay. So what we're looking at here is, I have to show this to you. So in April of this year, in Collin County alone, sellers were getting almost 110% of what they listed their home for. 110%.
Wow.
And interest rates were about what?
Well, they already kind of inflated list price even. That's crazy.
Yes. Yes. So tell me, what were the interest rates in April? Do you remember?
5, probably.
Okay. So 5% on, like, imagine if that just for easy math, $100,000 home, that would be $110,000 home, right? So that's $10,000 extra that they're paying. Yes, interest rate was lower,
Yeah.
but doesn't it make more sense to be able to negotiate price? Because now we're at 97%.
Yeah, I
Isn't that
sent,
insane?
I put a chart out. It takes close to 10 years for you to get that money back in appreciation and interest differences and all that stuff. And that's counting that you're in that 7% mortgage for 30 years. I mean, or for 10
Right.
years to get that money back. I mean, if you will have a chance to refinance that as soon as maybe next summer, it could be, a year, maybe 18 months, but like that's saying you stay at that 7% rate. So my fear is that many people that are sitting here waiting for rates to go back down are going to get back into the same similar situation. So, I see opportunity in the market today, especially for the lower down payment buyers, to get in without having to be the, chasing the multiple offer, cash offer situation around. So
Absolutely. Absolutely. And so not only, I wanted to show this to you because this is not even painting the full picture. Okay. So this right here is basically showing if you're if the sellers are for the sellers that are in Collin County, they are making on average 97% of their asking price, right? Okay.
Mhm.
Well, I looked at the last 7 days. So this is the chart that Brooks, this should look familiar to you because this is what I show every Monday in my market update, because it's just a 7-day look back. It's the micro data that we don't normally see in those monthly trends and monthly reports. But I want to show you this. This is just Collin County. So whoever's watching, I want y'all to know this is only Collin County. So closed in the last 7 days, there have been 233. Okay. Do you see this number?
Mm-hmm.
Okay, so I'm going to show you something. I exported, let's see if it'll let me. 1 second here. Still new to this.
You're doing good.
Okay, hang on. Can you see my screen?
Yep.
Okay, so what about now?
Yep.
Yay. Okay, so do you remember that number 233?
Mm-hmm.
Okay, so 233. This is, I redacted a lot of data. Okay, so so I'm not in violation here. 233, those closings in the last 7 days in Collin County. I wanted to know what the seller contributions were. You ready for this?
Yeah.
In 7 days, sellers gave buyers $815,000.
Wow. Some of those are significant. I mean, 12,000, it looks like it's
Look at
close
this.
to 50% of them, 20,000.
Look at that. So
Yeah.
not only is the median percentage to original list price at 97%, look at this money that buyers are able to get towards their closing costs. Have you seen anything like this?
2013, maybe.
Yeah, it's been a
2014,
long,
everything we did back then had 4, 5, 6,000. I mean,
it's been a long time.
20, yeah.
So
But
this
it's been
is
a long time since I've seen 50% of the houses have seller concessions on them.
I mean, right? So there's 233. I've summed it up, but let me see. I guess I can change this to count. Let's see how many. Oh, it's going to count those as zeros. Never mind. I was going to see how many of those actually, but yeah, you're saying probably around 50%. You may be right. I mean, that's
40,
pretty significant.
40, 50% of them. Yeah.
Yeah. So that's a huge, huge opportunity. We have people that are on the sidelines going, well, I just don't have, a lot of closing costs. I just don't have the money to put, 20% down. And my fear is that they don't have enough information, that they're sitting on the sidelines, living in fear and not taking advantage of these opportunities.
Yeah, well, I mean, with information, you can mitigate fear, right? But if you just listen to headlines and mainstream media, like the sky's falling and you should never buy a home, and that's just absolutely not the case. Like you look for opportunity, right? In times of despair, like that's when fortunes are made, right? You want to buy when others are in fear. It's a Warren Buffett trait, and he's been stockpiling cash for the last 2 years, ready for his opportunity.
Oh yeah.
He doesn't lean towards real estate. He's a stock guy, but it's the same thing. It's an investment, and that's the opportunity in front of us. Is don't live in fear like everyone else. Look for the opportunity in the market to fit you, whether it's a primary residence or your next investment property or whatever it is. Like 1 in 6 loans right now is going to an investor, and so those are the people that are seeking opportunity in the market. The other 5 are buying probably because they have to, or 4 out of those 5, 1 is seeking the opportunity for their family. But when you buy, like as a primary residence, you think a little bit differently. Is this an investment or not? And that's where you can't get lost in that. Like that's the gravy on top of it. You buy a primary residence because you need a place to live and raise your family and all those things. The ancillary benefit of that is the appreciation and the investment that you have. So when you're looking at it from an investor standpoint, it's we're looking to buy low and sell high, or buy low and hold and then sell it in the distant future. And again, it's back to time in the market, not timing the market.
Absolutely. So speaking of that, I have had 2 people reach out to me today alone. They are currently in a lease. They have, almost a full year in a lease. They may or may not have flexibility in getting out of that lease early or whatnot, and they'll be looking into that a lot. And what we have seen is that a lot of landlords are letting folks, especially in the apartment, industry, letting folks out of their lease early because they can turn around and lease it for more. So we have seen some of that. But what would you say to someone that is currently in a lease and would prefer to wait until their lease terminates, and that would be, call it, next summer?
I mean, you're trying to come up with a perfect time to buy. So to me, it would have a lot to do with what the lease says and how you can get out of that. If it's, detrimental, like $10,000 to get out, I don't think any of them are that much. Typically it's 1 or 2 months rent, or you have to pay back the special that you got. A lot of companies are wanting you to get out of the lease so they can lease it for more. So I think there's opportunity in that, but I would explore that side of it first. Like, what is it going to take me to get out? Mm-hmm. And then what can I buy? So get pre-approved, look at your finances. What do I have? Does it meet my goals? And then start looking, like it doesn't, you do all that. It doesn't say you have to buy tomorrow, but if that right house and that right opportunity comes up, then buy tomorrow, and then have your exit plan for your apartment and all that stuff that goes with it. But you're not going to, it's very difficult to time and say, okay, your lease is over in June. All right, we're going to start looking in April. Well, what if you don't find anything in April or May or June? And now you're
up against a deadline.
Yeah, or interest rates drop and everybody's back in the market, and now it's a free-for-all frenzy and everybody's trying to buy again. So the opportunity is there. It just gives you a little bit of time to make the right decision. So just like any major financial decision or life decision, like getting married or whatever, like you kind of have a plan in place, right? You got to look at it from an analytical standpoint. Look at the math on it. What does it cost me? What do I want to do? What are my goals? And, how do we accomplish that? And we do that for folks all the time. Well, my lease is up in June, but I still want to talk. And that's fantastic that they're thinking that way. Many, too many people are 60 days out, and then they have that conversation. They don't have enough money to make it happen, or, enough time to make it happen, or their credit needs fixing or something like that. So there's just so many things to plan for that, starting that plan now, even if their lease isn't up for 9 or 12 months, is a good idea.
That's great advice. Thank you for sharing that. So let's talk about, I'm sorry about that background noise. So let's talk about some opportunities for these buyers. So your qualified buyers that are out looking in the market from a loan perspective, what opportunities and options do they have?
There's there's lots of different ones. So you have grants and down payment assistance programs for people that need additional money for their down payment. We look at different solutions for that to see if the grant or the DPA is best for them, or if, bringing their own funds, because there's a trade-off in interest rates on bond programs versus non. There's 3% down conventional loans that are just for first-time buyers only. There's buy down programs. So seller funded buy downs can temporarily lower your interest rate, like 2-1 buy downs or 1-0 buy downs, which lower your rate considerably for 1 or 2 years on the loan, or even 3 years. There's a 3-2-1 buy down, but say a 2-1, say if rate was 7% today, the 2-1 buy down would make it 5% for a year, 6% for another year, and then 7 years 3 through 30. But ideally in that 24 months, rates will come back down and they can refinance it. So it lowers their cost. If you can get the seller to fund it, that's the way those work. So there's lots of different ways to skin the cat. It's really about what their goals are and what makes sense for them. They may not even need that. It might be that, this fits their scenario because that's the size home they want to buy, and that fits their payment and everything works. And it's just, until you explore it, you just don't know. There's a lot of fear behind qualifying for a mortgage or buying a house. And there's just, information gets rid of that fear. So pursue it, study it, talk to a professional, get qualified, understand the plan, and then work towards your goal. So
that is fantastic. And I think that's a perfect note to end on, unless you have anything else to add.
I think we covered it today. So I appreciate you having me on again.
It was a pleasure. I'll talk to you soon.
All right. Thanks.
Bye, Brooks.